Hello and welcome back. I'm Rachel and you're watching 𝐊𝐴𝐚 TV live from Sydney. This is the Sectoral Pulse show by 𝐊𝐴𝐚 TV, a special show covering all sectoral movements from the markets for the day. The Australian share market opened marginally higher in opening trade today. The benchmark ASX 200 started the week on a positive note, tracking Wall Street's gains, while strong commodity prices lifted local miners and gold shares. The S&P ASX 200 index is trading in the green today after closing 1.3% higher at a record peak on Friday. Sentiment was helped by Wall Street's higher finish on Friday as investors shrugged off a stronger than expected inflation reading. Though the market slipped into the red in mid-market trade after hitting a record 7,200 level for the first time in its history this morning. The market witnessed subdued trade as investors remain cautious ahead of a raft of economic data which will have an impact on the market. And now let's look at some trending updates from the sectoral front. Gold stocks rose 1.6% to lead gains as the bullion popped above the $1,900 mark. That was after data showed US consumer prices surged in April and boosted bullion's appeal as an inflation hedge. Gold miners, Newcrest Mining and Northern Star Resources are trading higher today. Mining stocks also rose with index heavyweights Rio Tinto, the BHP Group and Fortescue Metals all rising between 0.4% and 1.6%. Iron ore futures had closed firmer on Friday after top steel producer China's statements on steel output plans sparked worries of a tight supply. Banking stocks were up by 0.2% with the big four banks gaining between 0.1% and 0.2%. Bucking the trend, energy stocks lost almost 1.3%, even as oil prices ended a two-year peak on Friday. Software firm Nuix shed 13% to hit a record low and lead losses on the benchmark on slashing its full-year revenue forecast. And Link Administration Holdings, PEXA's largest shareholder, shares in Link fell 4.9% after the company said it would take the online real estate firm public instead of accepting 𝐾KR&Co's takeover bid for the unit. In New Zealand, the benchmark S&P/NZX 50 index rose 0.4% to 12,228.37 points, with cancer diagnostics firm Pacific Edge being the top performer on their bourse. In other markets, Japan's Nikkei was down 0.3%, and S&P 500 E-minis futures were up 0.11%. Moving on to the latest updates from the currency markets now. The dollar held a nearly two-month high against the yen on Monday after a key measure of US inflation showed stronger price gains than expected, keeping alive expectations of an eventual tapering in the Federal Reserve's asset buying. The dollar traded at 109.87 yen, having reached 110.2 on Friday, coming within striking distance of the one-year peak marked at the end of March. The US inflation data also drove the greenback higher against other currencies briefly as well, though the currency ran out of steam ahead of a long weekend in New York and London. The euro, meanwhile, changed hands at $1.21.94, off from Friday's low of $1.21.33, while the British pound stood little unchanged at $1.41.89. US consumer prices surged in April with a measure of underlying inflation blowing past the Federal Reserve's 2% target and posting its largest annual gain since 1992 due to a recovery from the pandemic and various supply disruptions. The core personal consumption expenditures price index rose 3.1% from a year ago, a tad above market expectations of a 2.9% rise. Although the high reading was due partly to the base effect, prices were depressed in April 2020 because of strict lockdowns, and its annual rise is expected to moderate later this year. For now, though, the data had limited impact over investors' expectations that the Federal Reserve will keep the current pace of asset purchase for many months, possibly by the end of the year, before tapering it. US debt yields dropped in a shortened session on Friday before a long weekend as month-end buying overwhelmed data. The 10-year US Treasuries yield dropped 2.9 basis points to 1.581%, marking the second straight month of declines after having risen sharply earlier this year on fear of inflation. But now, with key Fed officials openly acknowledging the need to discuss tapering, further signs of strength in the US economy, such as Friday's payrolls data, could fuel debate about tapering. Elsewhere, the Chinese yuan held firm near its three-year high of 6.3590 per dollar hit on Friday, trading at 6.3655 in offshore trade. A survey on China's manufacturing sector due later today is the next biggest focus. In volatile cryptocurrencies, Bitcoin was little unchanged over the weekend to trade at $35,864 after briefly hitting a one-week low of $33,425, while Ether stood at $2,407. On the month, Bitcoin was down 38% so far, which would be its biggest drawdown since 2011, while Ether has lost 13%. Now, before I share more trending updates and news that matters, it's time for a short break.
At 𝐊𝐿𝐼NE TV, we'll take you to the heart of the Australian equity market. We'll bring you breakthrough stories that highlight volatility, as well as tailwinds building across the length and breadth of markets. Whether space travel will gain momentum, while economies may gradually open amid vaccine rollouts, our experts will share their timely inputs. So join us on this exciting journey of live streaming, financial and stock market news. 𝐊𝐿𝐼NE TV.
Hello and welcome back. I'm Rachel and you're watching 𝐊𝐼NE TV live from Sydney. This is the Sectoral Pulse show. Australia's second most populous state of Victoria, the epicentre of the country's latest coronavirus hotspot, reported 11 new cases of community transmission on Monday, taking the current cluster to over 50. Victoria went into a strict 7-day lockdown on Friday after new COVID-19 infections in the state capital Melbourne ended its 3-month run of 0 community cases. The swelling of numbers, particularly a mystery case in a worker at an aged care home in the city, have raised questions over whether the lockdown will be extended beyond the 7 days announced initially. A second worker and one resident at the facility have now tested positive. The prospect of a larger outbreak in aged care homes is highly concerning, given hundreds of elderly Victorians in such facilities died of COVID-19 last year. The latest outbreak was caused by a returning resident who left hotel quarantine in neighbouring South Australia after testing negative, but later tested positive in Melbourne. Victorian officials held a press conference earlier today at 12:15. Medical officials have said the latest COVID-19 variant was first detected in India and was likely to be more virulent than the original strains, taking just 1 day to infect another person, compared with earlier strains which can take around 5 or 6 days. Victoria endured one of the world's strictest and longest lockdowns last year to suppress a second wave of COVID-19 that killed over 800 people in the state, accounting for 90% of Australia's total deaths since the pandemic began. Swift contact tracing, snap lockdowns and strict social distancing rules have helped Australia keep its COVID-19 numbers relatively low, with 22,275 local cases and 910 deaths. The country is ranked among the top 10 at a COVID-19 performance index for its successful handling of the pandemic. Moving on, Australia on the 31st of May this year approved a $2.28 billion project to build the country's longest power transmission line, which the country's energy market operator considers critical to handling electricity supply from new wind and solar farms. The Australian energy regulator, whose role includes ensuring power customers don't face excessive bills, approved the 900-kilometre Energy Connect project between South Australia and New South Wales after the company's cut its cost by 4%. Energy Connect, developed by Transgrid and Electranet, is one of several interconnectors that Australia's energy market operator has said are needed to prevent blackouts while keeping a lid on power prices. Australia's grid was designed to deliver power from always-on coal-fired plants, built near 3 big mining regions. But it has run into problems over the past 5 years as wind and solar farms supplying intermittent power have hooked up to parts of the network in remote locations where there's limited capacity. Now, before I share some more details on the Energy Connect project and Property Exchange Australia IPO, it's time for a short break.
At 𝐊𝐿𝐼N TV, we'll take you to the heart of the Australian equity market. We'll bring you breakthrough stories that highlight volatility, as well as tailwinds building across the length and breadth of markets. Whether space travel will gain momentum, while economies may gradually open amid vaccine rollouts, our experts will share their timely inputs. So join us on this exciting journey of live streaming, financial and stock market news. 𝐊𝐿𝐼N TV.
Hi, I'm Rachel. Welcome back. You're watching 𝐊𝐼N TV live from Sydney. This is the Sectoral Pulse show. We're discussing Energy Connect project details. Well, the Australian energy regulator has approved the 900-kilometre Energy Connect project between South Australia and New South Wales. The energy market operator forecasts that Energy Connect could clear the way for up to 1,800 megawatts of low-cost renewable energy generation in South Australia, New South Wales and Victoria. Financing was delayed as regulators had refused to revise cost recovery rules, which Transgrid and Electranet had said were making it hard to line up debt funding for the project. To get the project over the line, Transgrid said on Monday it had secured $295 million in hybrid debt funding from the national government's Clean Energy Finance Corp. The company says this was key to financing its $1.834 billion section of the transmission line in New South Wales and helped cut the cost of the final cost of the project. Electranet says it will spend $457 million on the South Australian section. Transgrid is owned by Spark Infrastructure and a consortium of investment funds. Electranet is owned by the international arm of the State Grid Corp of China, Malaysian firm YTL Power Investments and Australian Utilities Trust. Now lastly, an update from the IPO market. Property Exchange Australia, otherwise known as PEXA, an online property settlements firm, is all set to go public to list its shares on the Australian Securities Exchange, with an aim to raise $1.18 billion. If successful, this could be Australia's biggest initial public offering of the year, surpassing KKR-backed non-bank lender Pepper Money's $500.1 million bid. According to media reports, the board of PEXA decided to launch an IPO after a deal to be acquired by private equity investment giant KKR fell apart. KKR had offered $3.1 billion to buy property settlements firm from its owners, including financial services group Link Administration. PEXA's 4 lead managers conducted a snap book build on Friday and closed on the same day as per the report. The offer price has been fixed at $17.13 apiece, giving PEXA an enterprise value of $3.3 billion. The Link Group is the largest shareholder in PEXA with a 44.6% stake in the company, while Morgan Stanley Infrastructure Partners hold 40% and the Commonwealth Bank of Australia holds 15.3%. The IPO will see Link retaining its stakes in the company, while Morgan Stanley Infrastructure Partners will offload its entire shareholding. The third shareholder, the Commonwealth Bank, will raise its stake to 17.4% from its existing 15.3%. That's according to a report from the Australian Financial Review. As a result, Link Group will continue to remain the largest shareholder of PEXA. A consortium of the Link Group, Commonwealth Bank of Australia and Morgan Stanley Infrastructure brought PEXA in 2018 for $1.6 billion. The online property settlements company was formed in 2010 out of a government-mandated project to modernise the $7 trillion residential property market. PEXA is the world's first digital property exchange platform. Defying COVID-19 pandemic-led crisis, the IPO market has seen strong momentum in recent months, with companies across all sectors lined up to list their shares on the domestic bourses. As many as 12 companies have filed IPO prospectus for the ASX listing in June, while several others are in the process of rolling out their public offering. Well, that's all from me for now. Keep watching 𝐊𝐿𝐴𝐼𝐻 TV as we bring you the latest news, trending market updates live from Sydney. I'm Rachel, signing off for now.